Why is trading the financial markets so difficult to make a consistent profit in? In today's video, I'm going to give you the real, no BS reason as to why trading is so dang difficult to actually make money in. And it is not what you think it is. If you're not already profitable, I'm telling you, the answer might surprise you. It is not because psychology is difficult. It is not because lack of education, and it is not because of a lack of discipline. Now, again, I'm not saying that these things aren't important, but let me tell you that the main reason that trading is so hard is not these things. Let's jump in. Welcome back to the channel, guys. If you're new here, make sure to hit that thumbs up button and subscribe. I'm going to try and keep it as real as I possibly can with you in this video, but if you could do me a big favor and hit that thumbs up button, it really would mean a lot just to help support the channel and what we're trying to do here and spread awareness about the realities of trading the financial markets. Now, whether you trade Forex or options or stocks, indices, commodities, futures, whatever you trade, cryptocurrencies, today, the real reason, I'm going to tell you the real reason. The real reason trading is so difficult is because the markets are an incredibly competitive place. One way I'd compare this is that if you think about any professional sports team, the people who are on those teams have gone through blood, sweat, and tears in order to earn their place on that team that they're playing on. You know, if you're thinking about baseball or basketball or soccer, football, whatever sport you want to pick, the people who have made it to the top have made their way through so much in order to get there. And not only that, for every one person that makes it to the big time in the sports world, there are millions of people who aspire to do the same that didn't make it. And my point with telling you that is that those people who have made it on those teams, yes, they have good psychology. Yes, they have plenty of education and they have discipline. I'm not saying that those things didn't help them to get into that place, but these things are simply not enough in order to truly make it in anything. Yes, you could have these things, but somebody who makes it to the final, the highest tier of some sports or athletics or business or finance or markets, whatever, the people who make it there go through so much. And what they do is they put in the work. So today, the real reason I want to tell you that the market is so hard to actually make money in is because everybody in the market wants to make money. Also, for those of you who are hustlers like myself and you're looking to get a little extra going with your trading account, I have a cool offer for you I wanted to share. Down below in the description, there are several brokers listed, whether you're inside or outside of the US, where you can get free stuff when you sign up using the links in the description below. Now, things like, for example, Forex brokerages or stock brokerages, down below in the description, there are welcome bonuses. There are also free stock shares if you sign up. I just wanted to take a moment to let you know that if you want some free money, there is genuinely some great opportunities down below in the description if you follow the terms and conditions down there. Thanks very much. So everybody wants to make money. That's obvious in the financial markets. The problem is, what happens is that the people who are very good at making money make a vast majority of the money that is in the system in the financial markets. The people who are the best at it, not only they make the most, why do they make the most? It's because when you're the best at making money in the financial markets, more of it comes to you. And inevitably, these people who a lot of times we call, hedge funds and banks and smart money, they end up, because of their skills, amassing ginormous quantities of money. Now, I'm not necessarily saying that, a trader can quadruple his account every year and get ginormous amounts of money quickly. What I'm saying is a lot of times the more practical way is people who are very good at this stuff, they get investors behind them, they get people who they start managing money on behalf of people, and they make tremendous wealth basically with their skills, amassing all of people's money. So the reason I say that is that most of the volume is done by these types of people, and these types of people are the best in the game. These are your people who have made it to the NFL. These are the people who have made it to the final, this is the final boss. So the people that you're competing with in the financial markets are not some random guy who's trying to trade a news spike and has no idea what he's doing and why the financial markets move the way they do. I'm not talking about those types of people. Those are tiny amounts of money collectively in this system. But think of like a ginormous octopus with a million different arms, right? That is the long-reaching arm of smart money. Now, smart money is not evil. They're just good at what they do. So they end up having a huge amount of power in the financial markets. And they end up, again, soaking up a lot of the profits that are out there and available. Now, that doesn't mean that you can't make money in the financial markets, but you have to understand who you're up against. These are banks, professionals, quants that are super geniuses. These are people, a lot of hedge funds, they hire entire floors of people who are PhDs in computer science to build out systems that extract money from the markets. And even then, it's still very difficult to do. So to think that you sitting at home just kind of, drawing a trend line are just going to beat that system easily is absolutely nonsense. Now, I'm not saying that trend lines are bad. I'm not saying any strategy. I'm just saying to think that a simple, approach is just going to make easy money, you're going to double and triple every year, is absolutely ludicrous. It's absolutely nonsense. So what is the solution? There's simply no way you're going to be smarter than a floor of PhDs in computer science studying price action. There's no way that you are going to beat their capabilities systematically to build stuff. So how could you possibly make money in a system designed to reward the best players at the table when you don't have the same tools, you don't have the same abilities, and you certainly don't have a PhD floor of computer scientists who are carving out edges in the markets all day long? How could you possibly compete? Well, the answer is, first of all, get rid of the psychology that you're going to easily beat this stuff. That's the first step. If you humble yourself massively and you say, yeah, I'm up against some big boys, some big girls, that's not really the right way of saying it, but you get my point. Some very, very professional guys and girls who are very good at making money in this thing. That is who I am competing against. Your competition is stiff. If you accept that first, that's going to take you a long way, because most traders think that they can apply some simple price action pattern and make 20% per month, which is absolutely ridiculous. Because for you to make 20% per month, you have to be robbing the geniuses that are running Wall Street, which is just not realistic. Instead, what you should try to do, in my opinion, is, and this is how I've made money in the financial markets over the time, is think of these as your Titanics, your giant boats in the water. And maybe Chandler can help us out with a visual of this. A huge boat going across the water has, a ton of wake behind it, but it moves slowly. It turns slowly. So the one advantage that you and I have is we can understand that, if you can track what these players are doing and capitalize on perhaps the same trends that they are doing, which I'll talk about in a second, we could perhaps be like jet skis behind these ginormous boats that are leaving a huge wake, right? Riding the waves and being more nimble and small, but accepting that we can't carve out what the ocean is going to look like next. We can't make ginormous waves and to make 20% per month or 10% per month, or and consistently do that, you need to know something that nobody else does. And this financial market is incredibly efficient. It's not entirely efficient, but again, the smartest money prevails, and the smartest money makes little mistakes, right? So if they're making little mistakes, for you to make significant money out of the markets, you would need to see price irrationalities that you could capitalize on. Like, for example, something trading at $20 that should be $30 and nobody's catching on to that, and you can just capture that. That is very hard to find in the market, because the market is incredibly competitive and hence efficient. That is why the market is so hard. The long story short, the reason it's so hard to make money in the markets is because the market is incredibly smart. It's incredibly efficient. It's incredibly, the big money knows the most and also has the most money to deploy, so they move prices to the right price as fast as possible. That's why when you see a price and you think, oh, this is undervalued or overvalued, A lot of times it's not. A lot of times it's right where it's supposed to be because the financial market, again, is pretty dang efficient, pretty dang smart, and big money knows how to price stuff very, very well. So it's going to be rare that you can spot a huge divergence in what should be priced at a different level. Not to say that it never happens, but to say that it is pretty rare, and it's very hard to find that. To make a ginormous, substantial edge in the market, that's what you would need to do. Now, let me show you an example of something different. And again, Chandler, help us out with some visuals here. Let's say that you go to Craigslist or Facebook Marketplace and you see a car on for sale that is clearly a couple $1,000s below what the market value is. Suddenly, in fact, again, we'll leave Chandler to give us our visuals. You have a car here on the screen, and that car, you know, trades around, it should sell around $12,000. But you go on Facebook Marketplace and you see a gentleman who's clearing out his garage and has decided he doesn't want this same exact car, and he's willing to sell it for $10,000 on Facebook Marketplace. And you say, wait a second, I could buy that car for $10,000 and sell it pretty quick for $12,000 and make a $2,000 or 20% return on my money. That's great. What if you offer him $9,000 and he says yes? Suddenly you have this great deal. So you could purchase the car for $9,000 and you can sell it for $12,000 and you can make a pretty substantial return on your initial investment. This is what is called a private transaction, where this transaction is clearly more inefficient. Unlike the markets, this is actually possible to find in, like, the used car world or used, stuff on the internet. You could buy something from somebody who may not know exactly how valuable something they have is, and then you can turn and sell it for its true market value by advertising it correctly, marketing it well, and selling it for, again, fair market value. My point with telling you this quick example is that in the stock market, the Forex market, the futures market, it is incredibly hard to find that same setup. Does it happen sometimes? Yeah. Can things get overbought or oversold? Yeah. But my point is, that's why it's so hard to make money in the markets. In private transactions where there's not a million people bidding on that same car, it'd be very possible to make pretty good returns on investments on an easy basis to a degree. I used to do this before I got into the financial markets. Now, the downside to doing that is that once you get to a certain point, it's very hard to move tremendous amounts of volume and find those deals all the time. So I moved more over to the markets over time, but that's another story for another day. Long story short, the market is very efficient, it's very smart, and it's very difficult to beat consistently. That being said, if you're gonna make money, you need to accept that it's difficult. You need to accept that you have to manage small, right? Manage your risk keep your risk small so that you don't get wiped out when you have losing streaks. And in the end, you can carve out small, slight edges and extrapolate them over time and compound them over and over. That is how you make money in a market where it is very, very competitive and hard to do so. You accept that it's a smart place, you respect the market for what it is, and you look to make small, consistent gains over time. I hope this video was helpful to you, and if it was, do me a quick favor, hit that thumbs up button, subscribe, and we'll see you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel, and we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.